So if you're someone that has a mortgage or you're gonna have a mortgage, one of the things that you're probably always thinking about is, how do I save money on my mortgage? How do I pay less? We have this conversation with people all the time in our daily course of business. And one of the things that comes up a lot, we get a lot of questions about this, is do adjustable rate mortgages save you money? Are they worth the risk? Do you actually, get a lower rate and all that stuff? When it comes to ARMs or adjustable rate mortgages, they're kind of like bell-bottom jeans. They go in and out of fashion. And so depending on what's going on in the market, what's going on with mortgages and the demand and supply for mortgages, basically, you will see lenders offer adjustable rate mortgages from time to time at attractive prices to entice deals. Basically, they're trying to create demand for a lack of supply, if you will. You'll also see where some FDIC banks or credit unions, for example, one of them that's in the news right now because they're being bailed out by all the other banks because they made a bunch of bad decisions, is First Republic Bank. Well, for a long time, if you went and deposited like $250,000 or $500,000 with them, which probably not the best move right now, but they would offer you a pretty sweet deal on like a 3-year ARM or a 5-year ARM or something like that. But if you weren't going to put a bunch of money into their coffers that they're going to, use to make money off of that money, they're not offering anything special. And that's what you'll find with most banks that are still offering ARMs at this point. Right now in like the mainstream mortgage market, if you will, adjustables, they're not popular. If you actually price them out, you will see that like you can get lower interest rates, but what you'll find is that they come with a bunch of points and fees tied to that lower interest rate. And in fact, when you compare the points and fees that you would pay on a 30-year fix to get the same rate, you're better off taking the 30-year fix. No joke. Like I said in the beginning of this, ARMs come and go in fashion, basically, based off of the market's need for them to exist. So right now, ARMs aren't very attractive, and so you're not going to see a lot of good deals on that. That is not where I, as a consumer, would be focusing my attention in terms of saving money. I would be looking at temporary buy downs, bi-weekly payments, principal reductions, and using a recast. I mean, there's other things that you can do to attack your mortgage to reduce your monthly cost versus rolling the dice and having your rate only be fixed for a few years.